Hello there. Welcome to Zimsec O-Level Principles of Accounts. Today we want to look at a question on company accounts. So this question requires us to prepare a profit and loss appropriation account and then a balance sheet extract. So the question reads: the share capital of Power Limited on 31 December 2004 was as follows. We are given authorized share capital and also we are given issued share capital. Remember, authorized share capital, we are just going to show it as a disclosure procedure in the statement of financial position or the balance sheet, and then we close the balances. They are not going to affect any calculations that we are going to make there, but we show it in this balance sheet extract. And then we now have the issued share capital is the one that is going to affect in terms of the calculations that we are going to make there in the balance sheet. Right? The question proceeds to say the information is available for the year ended 31 December 2004. We've got some balances that are given there. Profit and loss, net trading profit for 2004, general reserve, 10% debenture, interim ordinary dividend, interim preference dividend. Those are some of the balances that were given in the question. Also have information there that is saying the company directors recommend that 110,000 be transferred to the general reserve. So this amount is going to be transferred from the retained income to the general reserve, from the appropriation to the general reserve. So it means general reserve is going to increase when we are in the balance sheet. Then the second one saying a final dividend of 10 cents in the dollar be paid to the ordinary shareholders. So very important in terms of the explanation that we have here, 10 cents in the dollar. What does it mean? It means it's for every dollar, the dividend paid is going to be 10 cents. So we find the value of dollars that we have there, then we multiply by 10 cents to get the ordinary share dividend. Because this one means every dollar has got 10 cents. So if you have got $100, it means we've got 110 cents. So it's just say 10 times $100 to get your amount of final dividend. So the third one is saying the final dividend be paid to preferred shareholders. So we're given the rate in terms of preferred shareholders there on issued share capital. So we're going to use that rate. Then on the required part, the first part is saying the profit and loss appropriation account for the year ended 31 December 2004. So this is the appropriation account that we are going to prepare. And then secondly, we have got the statement of financial position extract is the 31 December 2004. The question proceeds to say, clearly showing the details of shareholders' funds and total capital fund. So basically, the equity section is the one that is being emphasized there, that we should show it. That is the bottom part of the balance sheet, where we are going to get the second balancing figure. So that's what we have there. Then we can move on to our question now. Remember, our first part is the profit and loss appropriation account, and we know that in the profit and loss appropriation account, the figure that we start with is the net profit before interest. So if you come here, you see that the figures for net profit are given here. So this is the profit and loss account is the retained income balance that is coming from the previous period of 550,000 that we are going to add at the end of the appropriation account. So the figure that we are going to start with is this net trading profit for 2004. This is the net profit before interest that we are going to start with, which is 750,000. Then we go to our other section and put that one. We are here now. We now put the net profit before interest is here. We put it in this column, which is 750,000. And we now go to the question to try to find out about interest. What do we have about interest? You see that we have got 10% debentures that is here, and the debentures are 500,000. So basically, we're just going to say 10%, which is 10 over 100. Then we multiply by 500,000 over 1 to get the interest, the debenture interest. So obviously, when you calculate there, you're going to get 50,000. So that's what we have there. We go to our other section, we just summarize that working. We are here now. We say now less. This is debenture interest. It's also very important that we show the working. Very important that we show the working. We are saying 10%, which is 0.10 as a decimal. Then we multiply by 500,000. And obviously the answer is 50,000. And remember, we are saying less here, so we are subtracting. So 750 minus 50,000, you are going to get 700,000. So that's what we have there. Then we go to the figures that we are going to subtract. We say less. Remember, we have got a transfer to general reserve that we have in the question. Transfer to general reserve. Right. We go back to check that transfer. Go down to check what we have there. So you'd see that the transfer to general reserve that we have is this one, $110,000 be transferred to general reserve. So we are going to transfer 110. So we subtract it, and then we are going to enter it in the general reserve. So right. So here, transfer to general reserve. So the amount that we have there, we are going to put that one in this column, which is 110. Right. And also we have got dividends that are there. Let's start with preference dividends. And we check whether we've got interim and final. We both interim and final if they are there. Obviously, the information of interim, we can find it there. The interim dividend, interim preference dividend, we are given 45,000, so we can put that one. Preference dividend, interim, 45,000. And we check for final, for preference dividend, right? The final dividend be paid to preference shareholders. But if you go to the issued share capital there, we've got information about the calculation of that preference dividend for the preference shareholders. We come here, it's given here. You see it given here, 9% preference share. So basically 9%, 0.09, then we multiply by 1 million. So if you calculate that one, that is 0.09 for preference, and then we multiply by 100. So when you calculate that one, you are going to get 90,000. 90,000 here. So this is going to be our final dividend. So here, preference final, we have 90,000. But obviously now we want to move on to ordinary dividends. And now we have ordinary dividends. Right, on order dividends, again, we go and check if we have got interim and final. So interim, we are seeing that ordinary dividend interim is 300,000. So we can go and enter that one is our interim. So here we've got interim 100,000, and then we go back to check for final. The instruction about final should be below. Right. The final dividend of 10 cents in the dollar be paid to ordinary shareholders. So what does it mean? It means 10 cents times the value that we have there for ordinary. So 10 cents, you see that we have got 1,500,000 that we have there. So 10 cents, 0.10, and we multiply by 1,500,000. Then obviously what you are supposed to get there for ordinary dividends, to multiply that one, you get 150,000 there. So we are going to put that one. So here we put final 150,000. 150,000. Then having done that, it means we have entered everything that needs to be subtracted. Yes, remember we're saying less. Then we add the total, put the total on this side. We add this one plus this one plus this one plus this one plus this one. So let's try to add that one. We say 110. Then we add 45. Then we add 90. Then we add 100. Then we add 150. Then we get 495. 495. So we have 495 here. So remember, this one we are subtracting it from 700,000. Subtract again there, 700,000 minus 495, get 205. Get 205. So this one becomes the answer that we have. Then we are supposed to add from there. Now we add retained earnings BD, that is retained earnings from the previous period, the retained earnings balance from previous period. So we come here, say retained earnings BT. And obviously our retained earnings BT, we are going to find it in the question. We go back to check that figure. We are given here that let's try to see. We are given here that the profit and loss account on the 31 December 2003, that is the end of the previous year, was 550,000. So this is the retained earnings that is coming from the previous period, 550,000. So we are going back to add that one. 550,000. So when we add, we are going to find the closing balance of retained earnings, and we could call it retained earnings CD. So we add the two, we get 755,000. So that's all the closing balance that we have on retained earnings. But remember, we also have a balance sheet extract on the second part. A balance sheet extract on the second part. And remember, on the balance sheet extract, so this is our balance sheet extract that we want to prepare. So we can have our heading here. This balance sheet extract. Remember, heading is also very important. Take note of. So on the heading, we are supposed to include the name of what you are preparing, and then when the year is ending and you are preparing for who. So if you come here, it's a statement of financial position. Statement of financial position. Right. So it's a statement. Statement of financial position. Or we can call it balance sheet. Or we can call it balance sheet. Balance sheet 4. Should also include the name of the company. The company here is Power Limited. S8, that is where the year is ending. 31 December 2004. Right, so that's what we have. And obviously, we are going to start with authorized. Authorized, remember, authorized is just a disclosure procedure. We just show it. We are going to start with authorized share capital. And then you can underline. So authorized, you now list the authorized that we have. You can check that authorized that we have in the question. That is the one that we are going to put there. Right, you see the authorized is here. We have got $2 million ordinary shares of worth $2 million. Then we've got 1,500,000 9% preference shares of worth 1,500,000. So we're going to just to list these ones. We put the total, we close it. Since we are not going to use the figures in calculations. Here we come. We say now 2 million. $2 million ordinary shares. And they have a value of 2 million. And then here we have got 1,500,000, 9% preference shares. 9% preference shares, 1,500,000. And then we add to get the total. Obviously, the total we're going to close it since we are not going to use it down there. We get 3,500,000. So that's what we have there in terms of authorized. Then obviously we move on to issued now. We move on to issued. Here now we've got issued share capital. For issued share capital, we check again what we have in terms of issued share capital in the question. You see that issued is here, 1,500,000, $1 ordinary shares worth 1,500,000. Then we put 1,000,009%, $1 per shares of 1 million. So we can go and summarize that one. Right. This is what we have in terms of issued share capital. And then we have got 1,500,000, $1 ordinary shares. It's 1,500,000. Obviously, we're going to put it again in this column. Then we also have for issued, we have 1 million again, 1,009%, $1 preference shares, 9%, $1 preference shares. And, the value is also 1 million. We add to get the total issued share capital, we get 2,500,000. So that's what we have there. Obviously, now we are left with reserves. Then for reserves, we also put our heading there to show that we are on reserves. And we go and check the reserves that we have, but obviously we have the general reserve that we transfer that one. The general reserves, let's try to see. Like the figure for general reserve is given here, which is 200,000, but we've got something that was transferred there again. I've got a transfer there of 110,000 here to the general reserve. So we are saying 200 plus 110 to get the total that we have for the period for general reserve. And the one that we had plus the transferred one. So we have general reserves. General reserves. Remember, we are saying 200,000 that we had plus the one that was transferred, which is 110,000. And obviously, there you are going to get 310. So in this column, 310,000. Then we also have the balance for retained earnings that we calculated in the appropriation. So we are also going to add here retained earnings balance. Right, we check the change in balance that we calculated. This is the change in balance, which is 755,000. So we are going to add it. So 755,000. So that's what we have there in terms of reserves. Then we can add here 310 plus 755. We can add 310,000 plus 755,000. Get 1,065. So here we have 1,065. Remember, we can on there, if we add there the total for reserves there will become, if you see the reserves figure plus what we have for issued, which is 2,500,000, we get 3,565. 3,565,000. Right, so that's what we have. But remember, we also have debenture as a non-current liability. Also have debenture there as a non-current liability, so we can include it here as non-current liabilities. And then we underline, we have got, we go back to check the balance for debenture. Right, on debenture, it's here 10%. Debentures worth 500,000. So we are going to put that one. We have 10% debentures. And they are worth 500,000, so you're just going to put 500,000 here. Then we add to get the total balance there. So if we add 3,565,000, and then we add to 500,000, then you get 4,065,000. 4,065,000. So this becomes our total, our second balancing figure in the balance sheet. If we had a full balance sheet, that was going to be our second balancing figure. So this figure that we got here is the total for equity and liabilities. Total for equity and liabilities. This is the figure for total. Total share capital and liability. You can use the term share capital or total shareholders funds. Total shareholders funds. And liabilities. So this is the figure that we have here. So remember, this balance sheet is prepared according to the accounting equation. Remember, the accounting equation states that the formula that we have for accounting equation says assets is equals to capital plus liability. So the capital, total for capital, so the total for total assets will give us the first balance figure. Then the year also, the total year will give us the second balance figure. So here on the extract, we are preparing this other part of the accounting equation whereby we are saying capital plus liability. So this is the second balancing figure that we have. So that is what we have in terms of the company accounts. We can stay tuned for more videos that will come that might help us for the exam that is coming. I wish you good luck once again, and I will meet again in the next video. With that, I'm signing out.